try and...
When I click on that one, yeah.
Right, good morning, everyone, as the numbers go up. Apologies for the slightly late start. As I'll click on the second slide here, bear with us if we have any sound or visual issues, but we're working through those now, and we are good to go. So thank you all very much for joining us today. Can I just confirm couple of things? First of all, that the chat is working, which it is. I can see people in there. Can I confirm, can you put something in the chat, please? Let me know that you can see my slides. You should be able to see the housekeeping slide at the moment. And then we will crack on with today's session. And we've got video. Yeah, we can see the slides. We've got video. We're all here. Fantastic. Only 5 minutes behind. Right. Welcome, everyone.
Good morning.
Good morning, Duncan. Good morning, Andrew. 60-minute webinar today on the topic of succession planning. Very quickly, housekeeping before we'll launch into it. Like I said, bear with us with any sound and visual issues. Hopefully we've got those sorted now, so we're good to go. You've got access to the webinar chat as usual in Zoom. You've also got access to, I'm just going to make sure I've got it open for myself, the Q&A box. Now, today's session, practical look at succession planning, asked for by members, one of the most asked for topics, right? And joining me today, I've got two IFA members, Andrew Coombs and Duncan Walker. You should be able to see on your screens as well. Thank you very much both for joining us. Both of whom have relevant recent practical experience of exactly that topic. So I've got questions I want to ask them, but I'm sure you've all got your own questions as well. And really, this was asked for by members. This is for you, of course. So I'm going to be fielding your questions as they're talking and feeding them to them as well. Best way to put your questions in is probably to use the Q&A box, because the number of participants we got, if you put it in the chat, it might get lost in the noise. So use that Q&A box. We've only got an hour session, so if we run over, if we got more questions than we've got time to answer today, we will be looking to put on some more sessions. So without further ado, very brief introduction. Duncan Walker, again, you should be able to see on the screen. Welcome, Duncan. Started his career 45 years ago working for RBS for 20 years in various positions. Started his own practice in 1998. Won IFA Accountancy Practice of the Year in 2009. Duncan sold his practice in 2022, so just coming up on 1 year ago now. Currently working on a consultancy basis 3 days a week for the practice that bought his. So succession planning from the side of selling. Andrew Coombs has recently taken over King's Oak Accountancy, so succession planning from the other side of the table. ACCA qualified, transferred to IFA this year, working with small businesses and working in that small practice position. So welcome, Andrew, welcome, Duncan. So without further ado then, let me kick off the conversation really. Obviously we're looking at succession planning today. So it might be good by way of an introduction for both of you to give an overview of how your practice evolved to where it is today, and where your practice was at when you started thinking about and getting involved in that process of succession planning. I'll hand that to Duncan first, I think, and then we'll go to Andrew after that. So how did your practice get to where it was when you started succession planning? Where was it at when you started that process?
Yeah, well, the practice, I've been running the practice for 25 years, as you say, Matt, and a lot of good clients, a lot of good connections and so on and so forth. It was more that I turned 60 and I started thinking about retirement when I got to that particular age. And I said to myself, well, rather than just wake up one morning and think I'm going to retire today, I started to think about what would be the best way to sell my practice, and what would be the best way to go about facilitating my retirement from my own practice, being very much integral within my practice, in that most of the clients that I dealt with wanted to speak with me. It was really when I turned 60 that I really started to seriously think about succession planning and retirement, and what was the best way to go about that.
Okay, so I mean, the number one point I'm taking from that is the importance of planning ahead, right? Which sounds incredibly simple when you put it like that, but easier said than done. Sometimes I think it's easy to get to the pattern, right, of just doing the day to day and not really looking one step ahead.
Yeah, the important thing is as far as I'm concerned, is to plan for the time when you want to actually leave the practice, and in which way you want to leave the practice. And in my particular case, when I found the correct partner to take over my practice, I didn't want to just be working 5 days a week or 24/7 as some weeks may have been. I wanted to still be involved, but not on as much a hands-on basis. So for that point of view, I managed to find someone eventually to take over my practice who gave me the best of both worlds, in as much as they bought my practice over, but I'm still able to continue working within the merged practice on a part-time basis. But you're quite right, Mark. That didn't come about overnight. When the age 60 was when I started to think about it. I was 62, so it took 2 years to complete from when I started to plan to when I executed the final deal. And I found the right person and the right practice to take over mine, both from my point of view and also, most importantly, from a client perspective as well. It has to be the right fit, is what I was looking for, not someone that may have given me the most amount of money for my practice. It was more about getting the right fit for my clients, getting the right fit for me and the stage I was at in life, in order that I could facilitate the sale of the practice, but still have some involvement in it for a couple of years or so before I finally down tools, if you like.
Yeah, so the right fit for you personally and professionally, how you want to carry on relating to the practice, and talking about professional responsibility, right? And we'll come on to that with a couple of the other questions. The right fit for your clients as well. Thanks, Duncan. I'll bring Andrew in now. Obviously, you've come at it from the opposite side of the equation, but if you want to, just by way of an introduction, tell us about where King's Oak is now, and your prior engagement with it, prior to taking over the practice, maybe.
Yeah, sure. So we're still a small practice. It's myself and 3 other members of staff, predominantly doing the bookkeeping side of things and payroll. Going back 15 years when the business was formed, it was my dad was in a senior management accounting position for various companies, and was looking for something to wind down over the last sort of 5-10 years of his heading towards retirement. So he built up the practice from absolutely zero, and built up to turnover of around £120,000. And 4 years ago, I came into the business with a view of taking over the business ultimately, and that was the main reason for coming in. So right from the first day that I joined the practice, we were looking at the succession planning, and he did look at other options, but we both agreed at that point in time that was going to be the best course of action for him, the business, and myself. And we're now 6 months into me formally taking over the business, but I've been largely running the business for the best part of 2.5 years with him in the background, before I formally took it over at the start of this year.
Great, thanks. So you said, in fact, both of you already answered one of the other questions on my list of questions, which was, when did you start thinking about succession planning? So 2 years ago for Duncan, and really what you're saying, Andrew, is about 4 years ago when you came in and started working in the practice. So, and I think you both alluded a bit to the importance of getting the plan in place. So sticking with Andrew for a second, and then I'll come back to Duncan with the same question. 4 years is, no matter how conscientious you are, 4 years is a long time, obviously, and a lot can change in that time. So at that point, when you started working in the practice about 4 years ago, what was the succession plan as it existed then? What went into it, and maybe how did it develop over time?
Yeah, so I had sort of senior management positions in other industries. Financial services was my background. So although I was connected to maths and financial side of things, I had very little exposure to accountancy. So the key thing really was for me to get up to speed on every element of the business, starting right at the very basics, from bookkeeping, payroll, VAT, all the way up to year-end accounts, management accounting, and business tax planning. And the plan basically was for me to progress over the period while doing my advanced apprenticeship through the ACCA, and with an aim of completing that within 3 years. Ideally, it took a little longer due to some personal circumstances, but the aim was always for my dad to retire at 65, and he was 65 this March. So that was always the end goal, and get to a position where I was comfortable taking over the practice at that point. And every step of the way, we were always referred back to that date, really, of putting things in place to be able to do that. So you gave me a lot of free rein in reviewing the practice as it was, how we could develop things. I come from a more of a technology background, so bringing in sort of the digitization of the practice, and that's still ongoing now, but we're probably 3/4 of the way there. And that was a huge part of the change, facilitating that for the legacy clients, but also any new clients, using the digitization from the onset, so that they were ready for the future, as were we. And then the other key thing was, I was the face of the business sort of a couple of years before Mike took a step back. So any new business, calls, things like that, were coming through to me. I was going out and meeting clients alongside Mike, so there was that transitional period.
Yeah, so that dual running, if you like, really, that overlap between the two of you, important from a continuity point of view. I'll come back over to you, Duncan, with the same question, really. 2 years out, 60th birthday, whatever it was, what was your succession plan as it existed at that point, and how did you go about developing it from there?
Yeah, well, I think at that point, a couple of years ago, in fact, probably 3 years ago now, because I sold the practice just about a year ago, 1st of September 22. So it's coming up for 3 years now. First of all, I thought my practice was ready for someone else to purchase the practice. And as much as I made the best use of technology, and that all my client information was all online, all digitalized, all my files for all clients were all online as well. So it made it quite easy for someone to pick up the practice and the clients and switch it over. So I think that's quite an important aspect as well for everybody thinking about selling their practice. Is your practice ready for someone else in a state that someone else can actually buy it as easily and transition those clients over as quickly and as easily as possible? So at the stage I started thinking about it, I felt that my practice was ready for that. AML and everything as well. Anti-money laundering was all online and everything as well. So from that point of view, I thought the practice was ready. Then I did quite a lot of research, both online and offline, reading about what's the best way to sell your practice. And I then came to the conclusion probably I best involved an expert in buying and selling practices. So I got in contact with an agent that actually specialises in that particular area. In fact, I got in contact with a couple of agents who specialise in that area and had chats with them. And during those discussions, I selected the agent that I thought was best placed to sell my practice. And the reason I chose them was because of the fact that they really took an interest not only in the number of clients and that I had and the turnover per annum and the profitability and so on and so forth. They really took an interest in what my philosophy was in terms of dealing with clients and the way I managed the practice. So they took a lot of time and effort to get to know me better and find someone that would be the best fit for my particular practice and the way that I run it. So that was the way forward I took. I selected an agency that was specialised in buying and selling accountancy practices. They then came up with 3 different practices that were interested in buying mine. And I then went along and had discussions with the 3 owners of those practices to see which one I felt was the best fit to take over mine. Because as everybody is probably aware, when you sell an accountancy practice, you don't get all the money up front. It depends on the retention of clients, usually anyway, is the way you get paid for selling your practice. So it's important that you select the correct partner, and we will run it similar to the way you've run it, because then you're going to maximize the price you get by them retaining the maximum amount of clients at the end of the day.
Thanks, Duncan. There's loads to pick up on there, I think, and I'll come back to Andrew with one of the points, although I'm curious to hear your thoughts on it as well. I mean, Duncan spoke about the importance of getting your practice ready for sale. Now, obviously, Andrew, although you're saying you and your dad explored different options for succession, you did settle on the plan of sort of internal succession, if you like. Now, you were involved for years, and like you said, becoming the face of the practice before taking over. But what sort of thought did you give, or rather, what sort of pointers or recommendations would you make for fellow accountants thinking about selling their practice or getting succeeded in their practice? What can they be doing proactively to get their practice ready for transfer?
Yeah, something that I feel as though I sort of did as part of the takeover anyway, but systemize the practice as much as possible, so that ultimately it could run without you. So if you're still working in the business, then remove yourself from that, depending on obviously the size of the practice. That's not always possible, but that's something I'm working towards myself now, is with the ultimate aim of being the business owner rather than the person sort of doing the year-end accounts and the managing accounts. So having a system in place from cradle to grave, as it were, for every client type, systemizing software usage. So ideally not having 10, 15 different softwares that you're using for doing accounts. I mean, we've got ours down to 3 that we use for all new clients. We've got a few legacy clients on other softwares, but moving forward over the next sort of 18 months, every one of our clients will be one of 3 solutions. So just that whole process of having a system in place for every type of client, and the key really of being able to operate the business without yourself. So processes written out, procedures, having the flexibility there for for that opportunity to enable you to step away from the business puts you in a really good position to sell in the future.
Yeah, thanks. Thanks, Andrew. And similar, same question back to Duncan, really. Or I suppose picking up on what Andrew was saying. In terms of getting the practice ready for sale, and like you said, the value you get for it might not be the only consideration, but what can accountants be doing in terms of including thinking about things like systematization of processes, digital streamlining, etc., to sort of maximize the attractiveness, if you like, of their practice as an offering to others?
Well, automate as much as you can as possible, and as Andrew said as well, trying to get most of your clients on a similar or the same platform, I think is beneficial as well. I mean, all my clients were mostly on Sage, although we did use QuickBooks and Xero as well, but they were the three main ones. But Sage was the main one that I had in the practice, and we used that for bookkeeping, final accounts, corporation tax returns and everything. So it was quite easy to transfer that over from my practice to the new practice. And I think that's a key consideration of any buyers of practices. They're looking to make things as simple as possible in the transition over to their processes and systems, so it's seamless as far as the client is concerned. And if you've got all your clients online, you've got bank feeds into your various bookkeeping platforms, it makes things a hell of a lot easier as far as the acquiring practice is concerned. So automate as much as possible. Try and be as paperless as possible. I did reach the point that I had a paperless office by this time I sold my practice. So again, it wasn't a case of having to transport huge big files across to another practice's office. It was just a case of transferring the electronic and the digital files across. So for that point of view, it was fairly seamless as far as I was concerned, the purchasing practice was concerned, and most importantly, as far as the client was concerned, there was no dip in the level of service. My other main thing was that because I was the person that mostly dealt with clients in my practice, I wanted to find someone with similar perspectives and ways of dealing with clients as I had. And that was why it was important to involve the agency in finding another practice with another senior accountant that had those similar views, because what I've done since the practice has been taken over and merged is I've acted to introduce the other senior accountants within the new practice. And again, that's been my primary role in the 3 days that I'm working, is actually just facilitating the handover of clients. And it's worked really well because of the fact that I've selected someone with similar views and similar ways of dealing with clients. It's been pretty seamless as far as that's concerned as well. Resulting in, touch wood to date, we've only lost one client in the 10 months since we put both practices together. So I think that's a fairly good testament to the work and planning that went into thinking about the right partner, getting the proper processes and systems and software in place. And this is, in fact, that it's been fairly seamless for clients. And as I say, we've only lost one client in that whole process over the last 10 months.
So some common threads really emerging already, I think, between the two of you who have joined us, really. Processes, systematization, digitization, paperless, as so far as possible and practicable, as you're saying. Dual running, in Andrew's case, that's him being proactively involved in meeting clients and being the face, if you like, before he officially took over. Duncan, in your case, at least partly, that's you staying on in this consultancy role after selling the practice. And continuity of approach as well, right? Coming
Absolutely.
maybe more naturally and organically for King's Oak, where there's that family connection in place already. In Duncan's case, it's an example of finding, as you just said, Duncan, a successor, a buyer who has the same approach, which I think has been borne out, like you said, in only losing one client since then. So some common threads from both sides, really important things to be thinking about. Now, we've had one question come into the Q&A box, which actually ties neatly into what was the next question on my list as well. The question comes from Len Lamerton, specifically to Duncan, but I think we can ask the broader question to both participants, really, which is, what different options did you consider for succession? Len specifically asking Duncan, did you consider selling to existing staff? So sort of an internal succession like that. So we'll start with you, Duncan, but then I'll come on to Andrew and ask what other options maybe King's Oak considered too.
Yeah, selling to existing staff wasn't really an option for me, because the only people involved in my practice was myself and my wife, and she was quite happy to retire, so that wasn't really an option. But as I said earlier, I did go through an agency who obviously are involved in buying and selling practices all the time. So I wanted to make sure, one, that I got the correct fit, and two, I was getting the best value for my practice. And I think going through an agent facilitated that, because it let me know what was out there, who was interested, what sort of options were available, what sort of prices would they pay. And the other thing that's important for everybody to know, that if you deal through an agent, there's no cost to the seller. The buyer pays all the costs involved. So any agency fees or legal fees or anything like that that's involved, it's the buyer that meets those particular costs. So my experience on dealing with, well, I looked at 2 or 3 agents, and one in particular I thought did a really, really good job, in that they gave me 3 options that I went to speak to. At the end of the day, I found what I think was the correct option for me and the best fit for me. And if I just been speaking to people and passing word round or advertising, I don't think I would have found the correct person as quickly as they did. And I think it was their knowledge of the market and who were potential purchasers that was particularly advantageous for dealing through an agent. And as I say, it didn't cost me anything, because the buyer picked up those costs.
Okay, I mean, that's interesting. I suppose the buyer picks up the costs, but of course the buyer is looking at the total cost to them, I suppose. So if you're going to play devil's advocate there, you might argue that they're willing to pay a X maximum price, and the agent's cut that's regardless.
That's totally true. But if you're not having to pay a £5,000 fee up front, which cash flow wise would I'm sure disrupt most people's cash flow, so you're not having to do that.
Yeah. So before I come on to Andrew, the same question, actually, just to follow up on the point of agents for you, Duncan. It sounds, I mean, I don't want to put words in your mouth. It sounds like you're saying, if you're looking for that external sale, use an agent. Well, are there any downsides you would say? Are there any alternative options?
Use the correct agent. Use the correct agent, I would say, because as I say, I did look at least 3 agents who were specialised in buying and selling accountancy practices, and it was one out of them that I found particularly good. So I'm not saying that they're all the same, because again, you've got to look around, speak to people, and find out the best one that is going to fit with your needs.
And so the one that stood out to you as the best, it was their attentiveness to your particular approach to practice is what differentiated them?
Yeah, they wanted to know about me. They wanted to know about the way the practice was run. They wanted to know how I dealt with clients and the approach taken and the service provided. They really went into great detail to find about how my practice was run, and then trying to fit that with the way potential buyers run their practice. And the other agencies that approached were more interested in the turnover, the spread of clients, and so on and so forth, which the one I went with was as well, but they did that bit extra. So that's why I chose to go with them.
Okay, yeah, that all makes sense. Andrew, waiting patiently there. Coming back over to you then. So, going back to the root question, really, what other options was Mike and yourself considering for changing the ownership and the running of the practice?
Yeah, so 4 options really. Like Duncan, selling the practice for an agent with some kind of consultancy based role to oversee that. Bring somebody other than myself into the business with a view of them taking over the practice rather than myself, and just packing it up and just saying you're retiring, and getting in touch with a couple of local accountants and putting them in touch with them for sort of nominal referral fees. Basically, they were the 4 options considered. And yeah, Mike, at the same time as Mike was thinking of his succession planning, I got offered a similar opportunity in financial services with the business I was at the time, but it was going to involve an awful lot of traveling all around the country, which was I've got a young family. That was the main sway with the decision from my point of view. And yeah, they were the 4 options, and I was happy to come on board with a view of taking over the practice in a few years' time, subject to me getting the relevant qualifications, and subject to it still being something that we both wanted to do over that period, because obviously that it was something that was brand new to both of us. We didn't know how we were going to get on working together for a start, but it worked out really well in the end. But there's always situations of stumbling blocks and things, but overall, I think I certainly think it was the right decision, and I don't think Mike has any regrets, and he's certainly enjoying his retirement at the moment. Lots of holidays and things. So
sure is, yeah. I mean, 2 comments on that from me. The first one is, I can't imagine working that closely with my own dad. But that speaks to the differences in relationships that we all have in our families, I think. The other point was, you alluded to, me taking over the practice subject to me getting the necessary qualifications, and I think that's just an important point to pick up on for anyone thinking about maybe different flavors of internal succession in particular, whether that is a family member or it's a member of staff who's been identified as having A, the potential, and B, the potentially the resources to do the buyout, is making sure the necessary regulatory obligations are being met, right? That includes qualifications, but it of course includes other things, including insurance, anti-money laundering supervision, etc. And maybe we'll come on to a couple of those with the next couple of questions. And in fact, yeah, let's just jump to that, because it's an appropriate time to do so, I think. What were the considerations, issues, challenges that you worked through from that regulatory and compliance perspective when it came to succession? So I am thinking about things like indemnity insurance. I'm thinking about AML regulation. I'm thinking about making sure the successors have the necessary expertise, certification, memberships, whatever in place to be an appropriate successor for yourselves. I'll come back to you, Duncan, with that question first.
Yeah, well, the accountancy practice that took over my firm was they were a firm of chartered accountants. So in terms of professional qualifications, they ticked all the boxes as far as that's concerned. As far as anti-money laundering is concerned, I always used the recommended corporate partners of the IFA, which is AML-CC, for doing all my anti-money laundering compliance matters. So that was, because it was all up to date with all my clients on it, all the risk assessments and everything else done. So that was quite easy for them to pick up and take the files again digitally from that particular software and transfer it into their own software. So again, it was quite easy for them to pick up all that had been done previously because it was all online, and they could just pick it up from there. As far as PI insurance is concerned, well, that's no longer my responsibility for the new practice, but obviously I've kept on my professional indemnity insurance in the meantime, which is recommended. You keep it going for a few years on, let's say, the slight chance that something happens with one of your clients that you've been dealing with prior to the new firm taking over. So again, from that perspective, it's been quite easy and seamless because there wasn't any, I didn't have any paper files that needed to be merged and stored and everything. It was all online. So they've just taken over all the online files.
Great, thank you. That's really useful and emphasising the importance of what's sometimes called run-off insurance, run-off professional indemnity insurance, right? So, yeah. Which IFA regs recommend to maintain for 6 years, in fact, after selling. Although, of course, the cost of that scales down over time as the number of clients and amount of work it needs to cover will, of course, decline over that period too. Andrew, is there anything you want to add to that, or any slight difference of perspective when you're doing it from the internal succession and you are the successor point of view when it comes to compliance and regulatory considerations?
Yeah, I guess obviously coming from ACCA, I needed to get my practicing certificate, and the ACCA had like this apprenticeship scheme in place, and yeah, they weren't very good with their administration side of things. Things were getting delayed quite a lot. Come across IFA. And I got my practicing certificate through yourselves and just found the whole process a breath of fresh air, to be honest, in comparison to dealing with the ACCA. So although getting the practicing certificate was sort of my personal number one priority in order to be able to take over the practice, it was the actual dealing with yourselves has helped massively. And then in terms of AML, engagement letters, things like that, I guess my dad coming from the SEMA background, so he was more management accounting, worked in industry predominantly, came into practice sort of later in life. The AML and engagement letters, things like that, sort of came in sort of much later from his working point of view. So I spent quite a bit of time reviewing those solutions, make sure that they were compliant, and made a few changes. So sort of introduced Go Proposal to make sure that we're compliant from the engagement point of view. And then we use Go Proposal's AML at the moment, but I am looking into moving that over to AML CC as well. In the process of probably doing that in the next couple of months. And then the other thing was the insurance. Obviously, my dad had been a member in practice for quite a few years, so the levels of insurance were fairly low due to his level of experience, the risk involved, I guess. Sort of newly qualified practitioner, the insurance can go up quite a bit. So one of the things that we've done initially is Mike is still got his practicing certificate running alongside to help with the costs of the insurance to bring that down. And it's certainly something for consideration. And we've looked at sort of the following year how much of a difference that's going to be. And just by having that extra year in practice has brought the costs down quite considerably. By keeping him involved sort of 1 day a week, it's made quite a big difference to those outgoings for insurance and compliance purposes.
Yeah, that's a really useful point there, and something that might sort of slip the attention until it's too late almost, potentially. So something definitely to be aware of, and we've all been there, and maybe we're there with kids or have been there with our own kids when it comes to newly qualified drivers and the exorbitant cost of car insurance that can be very slightly mitigated by having a parent on the insurance as well. So there's some sort of analogy there, I think, too. We had a few questions come in from the audience while we've been talking there. Just before we do that, go to those, I've got one sort of connected question for Duncan in particular, really, which is there anything you want to say about what anyone looking to sell their practice needs to be thinking about ahead of time when it comes to their own personal tax implications and liability?
Well, obviously, if you're selling a practice, if it's a limited company and you're selling the shares in those practice to a new practice, then you're liable for capital gains tax as far as that's concerned. So obviously at the moment you will get some relief for selling a business in terms of the capital gains tax, and you will only be paying at the moment 10% capital gains tax on the sale of your business, which is a lot less obviously than you would be paying in corporation tax, for example. But capital gains tax is the main thing that you need to worry about as far as selling your practice is concerned. And if you're selling it in is it staged payments, it's normally so much up front and then so much on completion, whatever the period is, then obviously that spreads the gains over a period, and you can make use of your own personal allowances, although they're reduced now from previous years. But again, it's capital gains tax, but in most cases you should only be paying 10% capital gains tax when you're selling your practice. And again, if you can spread out the payments over a period, you can make the maximum use of your own personal allowances.
Yeah, so there's a potential upside really to what you alluded to already, which is the structure of a sale being based around client retention over time. That naturally will facilitate sort of spreading your gains.
Yeah, that's correct. So again, you need to think about your own personal situation when you want to incur the gains and pay the relevant tax,
Yeah. Okay, great. Thank you very much. Right, I had a few questions come in, like I said. The first one is sort of a question which are from Amir. Direct quote, if I wanted to buy a practice, where would I find the agent? I'm gonna sort of generalize the question really, is how, I suppose to Duncan primarily, how did you go about researching, finding agents? You said you compared 3. Where did you find them? How did you go about it? Would you recommend a different approach if someone was looking to buy rather than sell?
No, I mean, I didn't actually have to do very much to find them, because they tended to contact me periodically throughout the period that I was running my practice, that agents are always looking for practices that want to sell, because that's what the business they're in. So over the years, I'd had various emails and met people at conferences, etc., who were in that particular game. So I knew of 3 that specialised in that area in the UK. So I approached the 3 of them to see what they could do in my particular circumstances for me. And then I chose one from that 3. I don't think it would be politically correct if I shared the details here just now, but if anybody wanted to contact me directly, I would be happy to share with them the agent that I chose at the end of the day.
Yeah, I'd say trust your instincts on that one. But yeah, if assuming Andrew's equally happy to do so, we can certainly share both Duncan and Andrew's contact details,
no problem,
along with the slide deck, and after this session is over. So follow-up questions can be sent through to them on whatever topic. Another question come through from Mohammed. talking about automation, digitization. Mohammed saying, if I was to sell my practice, how would we go about transferring client data, information, etc., from my practice to the buyer? Mohammed saying, will the software companies move client details and data around, or is that something that sort of handled internally, or by handing over the keys, if you like, to a given digital account or subscription?
Well, in my particular case, as I alluded to earlier, I use Sage, and I use Sage Accounting Plus, and I was the owner of all the client data for the ones that I process. So it was simply a case of contacting Sage, advising them of the fact that my practice had been taken over, and the new practice then became the owner of that data, and their details were recorded, and they pay the subscription fee for the ongoing charge from Sage for all the clients that were on it. So it was an overall bureau base that I had, so it's quite straightforward. It wasn't a case of having to approach each client and say, can you now change over to XYZ practice now, as opposed to mine to share your data with. It was all there anyway, and it was just a case of changing the ownership of that data with the software company.
Yeah, so I think 2 points to pull out of that. One is it emphasizes the importance of having that clarity of communication and understanding with the buyer of what software is being used, and that sounds like a very smooth process, really, but it depends on them being happy to carry on that thing. I don't know why they wouldn't be. They're just making a rod for their own backs if they're not, but it's part of the conversation that needs to be had, right? And
it's certainly more difficult if obviously if the client pays a subscription for the software, and then you just sign in as their accountant, then you need to get individual clients' approval to switch over to the new account. But in my case, that didn't happen because I paid all the subscriptions for the vast majority of my clients. So it was only a case of changing the subscription payer as far as that was concerned.
Yeah, so really, really good point there, depending on how you structure those things and work with your clients when it comes to digitalization. Making things a little bit more.
The rest of my client files were all on Microsoft Office 365. So again, that made it easy to transfer these files over to the new practice.
Yeah, and again, back to the importance of understanding your systems, your processes, and how you're storing and transferring files, and having all that be part of your succession plan. So it's not something that you're doing after the fact. Oh, I've got a successor now, how do I go about getting X, Y, and Z over to them? Having that plan up front. And it also, to pick up on an earlier point about that Andrew made about cutting down on the number of different software providers they were working with, the more of those you got, the more complicated that part of the succession is going to be, and the more potential pitfalls that are going to come up. Thank you very much for that. So I got one other question come through here from Amir again. Amir is saying, so this is maybe not specifically succession planning, but I think it is one that Andrew's well placed to comment on, being relatively newer to the profession, and King's Oak being relatively and his work with King's Oak being relatively younger. Amir's saying, I'm facing a challenge getting clients, and my situation being working from home. So how have you gone about sort of growing the practice and increasing the client base?
Yeah, so our offices are based at my parents' house and my house, so we don't have an office in the street. So exactly the same situation. Obviously, I guess slightly different. I had a head start because I already had an existing client base, but that gave me the foundation to work from. But we've probably replaced maybe 20% of the old client base and added an extra 60-70% of clients since I've come on board. And the main sources from that was getting myself out there, basically. putting myself on social media, doing regular blogs, going to local networking events, speaking to people. So from a social point of view, I play in football pool teams, speaking to local business owners. We did mail shots to a certain target audience. So we had quite a few hospitality clients at the time. So we targeted all the local pubs with a mail shot, and we got a couple of decent clients out of that. And I guess building up your reputation, you then start getting a lot more word of mouth referrals. Some of the online platforms, so like Bark is quite good for starting out and getting clients. However, what I would say, you can spend sort of thousands of pounds on marketing, Google ads, things like that, but you need to niche down on what you're targeting. So I find initially, to get new clients, it was a lot easier to attract clients in your local area, because a lot of people do still want some face-to-face contact. They're happy to do onboarding via Zoom and things like that, but they would like that face-to-face contact now and again, especially if you're starting out. So going back to Bark in particular, I drilled down you can set your parameters, and there's quite a few similar advertising products out there, but you can set your parameters of where in the country that you want to get the leads from. And then the other thing is, you need to respond to them straight away, because there are obviously competition, and get in touch with them as soon as they're sort of on their computer doing that submission. And yeah, basically just put yourself out there everywhere. So one of the other things I did when I first came on board was get King's Oak on pretty much every listing we could. All of them were free listings. So, you know, like your Yale, your Yelp, obviously Google and Bing have a presence on there, but there's about, if you just Google listing ads, there's about 30 or 40 on there that you can just get a presence on for free, and it just starts putting you further up Google in your area, and keyword searches on your website as well, to get higher up on the ranks for AdSense. So there's loads of things you can do, but predominantly it's getting your name out there and building up a bit of a reputation. If you wanted to niche down, you can sort of do online videos and blogs specific to those niche and find out where they're hanging out. And it's worked really well for us. I'm sort of full at the moment until I decide what I want to do moving forward in terms of expansion, which is a really good place to be.
Yeah, great success story, and some really good practical workable advice there, I would say, as well. Proactivity, networking, local, right? So I don't know if you use, or if it's relevant in your area, but certainly depending on where you are in the country, local chambers of commerce can be a great way to build those connections with local small business clients as well. Just picking up on some more questions coming through. Len's asked, Duncan, did you digitalize all archive files for client handover? I think I can answer that one for you, Duncan, by virtue of you saying you run in a paperless office, that it was all digitized already. Is that correct?
That's correct. Yeah.
Yeah. Okay. So we'll skip over that one, just because we've had a real flux in the end, and which is great, but just conscious of time as well. Sean's asking, Duncan, what was the basis for valuation? Were you basing it on earnings before interest and tax, or EBITDA? Were you basing it on turnover? What was the profile? You know, how much was coming in on sale? How much was coming in over time according to milestones, targets, etc.? Are different clients worth more? You know, bookkeeping versus accountancy, all those kind of questions there.
Most purchaser will pay based on your gross fees per annum. So how much income you generate per annum on a regular basis. So in other words, what do clients pay on a normal basis throughout 1 year, and then pay a multiple based on that particular turnover. So if, for example, you both agree that your annual turnover is, say, £100,000, then it will the price that most purchasers will pay will be on a multiple of between, at the moment, probably 1 to 1.3 So in the case of 100,000 turnover, you could get 110,000, or you could get 130,000. That's the normal multiples that are applicable at the moment. When would you get that money? Well, that's negotiable, but normally you get so much up front, and the balance based on how much of your clients are retained over a period of time. And sometimes that can be over a year, sometimes that can be over 2 years or 3 years. It depends what you manage to negotiate with the purchaser at the end of the day and what they're prepared to give.
Great answer. Thank you very much. And just one other question, I think, and in fact, Duncan, I think that answer has answered another question as well, which was how to work out how much a practice with turnover of X amount is worth. So I think you've covered that one off nicely. Synod, hopefully I'm pronouncing that right. Apologies if not. I thought that capital gains tax arose when the deal was agreed, not when stage payments were made. Any comments?
It's when you receive the money. So it's not when the actual agreement is made. It's when you receive the cash, just like in any other capital gains transactions. It's when you receive the money.
Fantastic. Okay, asked and answered. Now, look, I had a few more questions on my list that I would have liked to potentially get into with Andrew and Duncan today, potentially around, you know, what obstacles they faced, how things changed over the years from when they began planning, because, you know, no plan survives first contact, as they say. Lessons learned, what might you do differently next time? So there's a whole flux, and I'm sure there are other questions that have come in the chat that we might have not quite had the chance to get to as well. So we are going to circulate Duncan and Andrew's details along with the slides, and I believe the recording of today's session as well, so it'll all be there to go back through if you've got any follow-ups. But I think this session has validated the level of interest that members have shown in getting some more content on this, and watch this space. Okay, I think more CPD in the succession planning space will be coming for your benefit and on the basis of your interest. So I'm on the topic of CPD. I'm going to very quickly, as we close here, cover off what's coming up in the coming months as well, at the end of which I will properly thank Andrew and Duncan. But first of all, I will just say now as well, thank you so much for joining us today and sharing your expertise and experience. Upcoming CPD, 18th of September, we've got our Northern England Regional Networking event. That is in Altrincham near Manchester, and in fact that is the day before, the evening before, Accountex North, which is in Manchester itself. So if you're planning on going to one or the other of those events, why not go to both and treat yourself to an evening out in Altrincham or Manchester, as your taste prefers in the meantime. Got more webinars coming in September as well. Our 60-minute webinar series will continue. Financial reporting quarterly update will be coming on the 20th of September there as part of that. And AML matters webinars. We touched on the importance of AML as part of your succession plan. Of course, it's important wherever you're at in your accountancy practice. Those are going to run through September, October, November as well. And the tax series, again, picking up after the summer break in September as well. Go to ifa.org.uk/CPD to see the details, to sign up, etc. Last plug of the day, or of this session at least, my community is now live, has been live for a few weeks at this point. An online member hub, platform, forum, chat room, discussion venue, whatever you want to call it, a great way to connect with your fellow IFA members with questions, with topics of interest, with debates, discussions, whatever. It's growing, it's active now. Get involved. You should have had an email about it in your inboxes saying, you know, my community is now live. If you haven't already registered for an account and got on there, you know, it's all free. It's one of your member benefits. So do it, make the most of it. And without any more to say on that just leaves me to again say, Duncan Walker, Andrew Coombs, thank you very much for joining us today. I hope everyone in attendance, 115 attendees I can see here today, fantastic. Thanks so much for coming along, and we will be sharing your details, so look forward to some follow-up questions from members on that. But otherwise, everyone, have a great rest of your day. Thanks very much.
Thanks,
Thank
Matt.
you. Bye-bye. Thank you. Bye-bye.
Bye.